Hi guys, welcome to your Monday morning video update for the FX majors and the dollar index going into the week 16th of September 2019. Going to talk about the dollar index to start with, then move on to the FX majors, talking about relevant support and resistance levels, and basically what we're looking to happen in the major currency pairs over the next couple of days and week. So starting off with the dollar index, I suppose this is probably the most important chart. This is the daily chart. Looks like an ending upward wedge formation, so a break of this support line, which comes in around about 97.75, and we look for a measured move down here towards 95.85. Still pretty mixed and volatile trading. When we go to this time frame, and this is the 4-hour time frame, we can see these big spikes in both directions, obviously one of them caused by the ECB. So we're getting this gyrating price action. What is quite important is that the open overnight has pushed higher from a previous support level, so there's nothing really to say from this time frame that we're not going to get more dollar gains, but because of that evening star formation, because of that ending wedge formation, we still look to sell into dollar gains for the majority of the FX majors. So just looking at euro dollar here, we've stalled at this trend of lower highs last week. We're starting to see some downward pressure. What have we got here that's bullish? Well, to start with, we've got an expanding wedge formation. So if we draw a line down there, and then obviously this trend line, and that has a bias to break to the upside. We've also got a double bottom formation on euro dollar that was confirmed with a break of this level here. We've also got a bullish outside candle on the daily chart. So 3 different factors that should push euro dollar higher. But thinking about that dollar index, we've got scope for some downward pressure. We've got a pretty solid support level today at 110.50, 110.47. And then we've got resistance to the upside located at 111.40. Now sterling is a different scenario than euro dollar, and if we look to euro sterling, which we will do in a while, euro gains we expect this week to be stronger than sterling gains, so we're flipping that bias, and with that in mind, we've got the potential for a much larger correction in sterling dollar. Even breaking down into shorter time frames, I can't get any sort of wave count on this major currency pair. What I do know is that it's broken out of this wedge formation to the upside. The measured move target is up here at 127.83. I've got some bespoke resistance at 126.30. We are seeing a move lower overnight. We've got support located at 122.85. So the possibility for a much larger correction to the downside in sterling dollar than euro dollar. Going to dollar Swiss, and this is just a large channel formation. You can see these DMARC 13 counts posted at the highs and lows. What's happened is we have had a move lower overnight. I believe we've had the gap open now, closed. We've got some bespoke resistance at 98.97. Signals aren't strong in this currency pair. We are looking at selling into rallies with a move lower down here towards the 261.8% fib at 97.05. Like I said, signals in this currency pair are far from strong. Dollar yen. Now, a breakout of this trend line resistance and then an impulsive move to the upside. We've stalled at the 161.8% fib level at 108.06. That would make us believe that this move to the downside and this gap break lower as well to the downside is still corrective. We can see that this was the open, so we've had quite an aggressive move higher already. So these dips still attracting buying interest, but we believe there's scope for another move to the downside. We've got a 38.2% fib level located at 107.23. We've got our bespoke support located at 107.18. Now, if we go to dollar CAD, this is a wedge breakout. A retest of that wedge breakout was seen on Friday, and then obviously all the turmoil over the weekend with the Saudi oil has seen a very large gap open in dollar CAD. However, we're looking like we're going to close or potentially close some of that gap. We've got bespoke resistance located at 132.60 today, and then we've got support down at 131.40. Aussie dollar stalled at a 50% pullback level. We're actually looking for a move lower today. We've got some bespoke resistance located at 68.77, so we've triggered a short in early trade. We've obviously got some trend line or reverse trend line support coming in at 67.82, but we've got solid weekly support in Aussie dollar located at 67.50. Euro sterling, I'm showing this time frame first. Pretty mixed volatile trading. Okay, trying to get wave patterns on here has been nigh impossible. What I do know is that this week here, which was the 12th of August 2019, posted a bearish outside candle, and that candle often indicates the end of a trend and the start of a new downward bias. We've broken into back into this triangle formation, but the most important time frame here is this one, which is this is actually the 8-hour time frame. We've got an AB equals CD formation target here at 88.42. We've got trend line support located at 88.51. We've got our bespoke support at 88.45. We're looking for a corrective move to the upside with a possible move back up towards this area here, which is trendline resistance. It's also previous swing high, and it's also somewhere that's been quite pivotal. So we're trying to get in on a dip early this morning, just hoping that that rally's not already underway. Euro yen. And again, we've had a decent move to the upside. We've had that gap open, thinking about correlation in both of these currency pairs. Euro dollar, we're looking at buying into dips. Dollar yen, we're looking at buying into dips. So euro yen, we've got to be looking at buying into dips. We've got some bespoke support located today at 118.50, but we've also got some bespoke resistance located at 119.75. So the rally in euro yen could also be limited. Okay, I hope you've enjoyed that video analysis, and we'll be back again soon with some more. Many thanks.